We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We got to add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the government Hey guys, what's going on? Jeb here, and welcome back to Coffee and Crypto Live. This is your week daily morning show where we bring you the latest and everything Bitcoin and cryptocurrency. And in today's episode, we are going to be talking about the two major scenarios that Bitcoin has before it. On the one hand, we have the fundamental argument that Bitcoin's liquidity cycle and the overall global economy's liquidity cycle is going to lead to a very short bear market where Bitcoin crashes down to maybe 75,000. We're probably already pretty close. And then bounces, and then we have an extremely bullish Q1 of next year, moving into a bullish 2026 in general. And on the other hand, we have our model that points down towards a bear market bottom of approximately $53,000 to $57,000 that we're going to be discussing as well. I'm going to show you both models. I'm going to show you the pros and cons to both of them, and then I'm going to show you which one I am leaning in the direction of. And honestly, I'm not too convinced which one we're going to see, but I do want you to understand that there are basically two paths forward. There's not really 10. There's more like 2. So today we're going to be talking about those paths forward, what Bitcoin is going to be doing over the next 12 months. And most importantly, we'll be discussing what we should be doing right now in this market to build wealth. Hint, hint, it involves investment. You see, you could have bought the exact top 4 years ago at 69,000, and you would still be up. But you'd be up 15% right now, which is not anywhere near as well as you would have done in the stock market. It is important that when we are significantly retraced from all-time high, that you build equity positions in Bitcoin. Because as you do that, that is how you optimize your entry. You don't want to wait 20 years to be able to beat the S&P 500. You'd like to be able to do that in the middle of the 4-year halving cycle. And so when we see opportunities like the one that is before us right now, Bitcoin being sub $85,000, it is very, very important that we take advantage of that. So we've got a lot to talk about today. I'm very excited to be here with you. Shout out to everybody in chat. Chico Esparza is in chat. Ohio is in chat. 1966 is in chat. Mole Man is in chat. Millie is in chat. John Stock Up is in chat. So Jeb is in the place. We have a huge parallel channel, connect highs and lows. We bottomed out. That's correct. We'll talk about that. Will Bitcoin touch $80,000 again, dude? I hope so. Touch $80,000 again, and someone else right below you said, hi, dude. I hope so. I hope so. I have bought, I don't know, a little over $10,000 in the last 2 days in Bitcoin. I'm really hoping that I can buy some more if we drop down to 75. At this point, I'm like, okay, I kind of like what I've done here at 85,000. I'd really like to see it go a lot lower because I'd really like to make that number $100,000 to $300,000 worth of entries. But I'd really like to see a bear market for that to take place. I was originally bullish. Like our stance on October the 13th after the 1010 crash, I said to myself, somebody blew up. We're going down to the bull market support. That bull market support was at 94,000. So we called 94,000. And we also said that we would probably drop down to 88 to 92 to hit liquidity, to kind of do a liquidity grab all of those long entries, fill the CME futures gap, and then we might bounce from there. When we dropped down to 88 to 92, as we predicted, we hit our head on 94 and didn't stop and didn't actually break above it. And right around that day was when we started getting word that a lot of these major players in the cryptocurrency space have all their bid down at 50 to 75,000. And that's when I was like, oh, yeah, the first half of our prediction was correct. We were going to drop down to 94, but I did expect a bounce here. Didn't materialize. And that's because, once again, I think there's some forced selling that's been going on ever since here. I think somebody is unwinding a position worth billions of dollars. Just about every single New York stock market open, New York open, we've seen a major crash on Bitcoin. We saw one right here. We've seen one right over here. We saw one right in here. You know, we've seen it right here, right. Let's see, where else? Right in here, right? We saw it right here. So the New York Open has brought with it an overwhelming number of crashes, which is why I'm actually looking at 9:30 on Monday to see whether or not we're going to have made this into a bottom. If we have 9:30 come on Monday and Bitcoin rallies into the New York Open, that's where maybe $80,000 was the bottom. And we'll talk about, like, we're going to get into some seriously deep analysis today. We've got a lot of really, really valuable charts that you're going to want to see. We're going to be comparing last bull market, last bear market. Like I said, I'm going to lay out the two paths forward that Bitcoin has, and then we were going to go ahead and talk about which one we think is most likely, but we want to be prepared for both. But if we see a bullish New York Open, that's where we are able to start being quite confident that maybe Bitcoin did bottom at $80,000. And where we bottomed, whether it's at 80,000 or 75,000 or 60,000 on this first leg down, as you will see later on in this content, is actually going to be extremely, extremely, extremely important. And so that's what we kind of want to go with here. Now, let's talk about these two scenarios. Let's lay them out. First scenario, global macro leads to shortened bear market and super cycle. I've been doing tens of hours of research over the last week, like probably 30 or 40 hours over the last week of research just on, over the last maybe 2 weeks, just on trying to figure out what our next model is. Our original model was we would go down to 94 and we bounce. We went down to 94 and we broke it. So we at least got the call right of where we went. I kind of expected we would bounce. But what do we do next? What is our next model? And I've really distilled it down into these two scenarios. One, global macro leads to shortened bear market and super cycle. This basically has to do with the fact that quantitative tightening is coming to an end. This has to do with the fact that you just saw $176 billion or $185 billion, whatever it is, liquidity injection going into the Japanese yen, going into the Japanese economy. This comes with the idea that we might see a rate cut or more rate cuts when Jay Powell is out. Maybe you see rate cuts drop down to 2, etc. Whatever it is. This is the idea that Bitcoin is going to see a shortened bear market, and we might bottom out in the next 3 months, and then Bitcoin goes on towards $300,000 like next year or the year after. That's that scenario. Now, the second scenario is a standard bear market. I want to start here because this scenario is actually the scenario that is the easiest to make predictions. If we go into a standard bear market, I can tell you within about a $10,000 range where we're likely to bottom out. And I can also tell you basically when we're likely to bottom out. And this is what I am actually hoping takes place. This is what I hope takes place, a standard bear market. I hope we have this because I would love to get more Bitcoin. And the way you get more Bitcoin is you get a cheaper entry. Remember, like I said, timing the cycles is actually quite important. And so it was a mistake of mine to fade the 4-year halving cycle until it was invalidated. And I was kind of getting that inclination up top where I'm like, we're going to do this. But this hadn't been invalidated, and that was a mistake on our part. We should not have done that. We should have said, nope, the 4-year halving cycle. We should have leaned very heavily into the idea that the 4-year halving cycle is true until proven otherwise, because that violated our principle of the trend being your friend until it ends. That trend has not ended because now we are setting up with a bear market, beginning setup. You know, the market looks like it's going into a bear market. So let's go ahead and talk about what a standard bear market would do to Bitcoin. So we're going to start with the standard bear market and what this would do to Bitcoin. Then we're going to talk about global macro leading to a shortened bear market and super cycle. This is the debate going on X. This is the debate going on everywhere in the cryptocurrency space, and I'm very excited to go over it with you. Ultimately, though, I do want to preface with this. No one, myself included, yourself included, has enough information to know which one is going to take place. We don't know yet. We'll have more confidence in the next probably 2 months which one of these scenarios is going to take place. But we just don't know yet. And anybody telling you that they know is lying to you. What we can say is that we are leaning in this direction. We think this is going to happen. We're confident about this. And the most important thing that we can do is we can prepare ourselves in the event that that does happen. Does that make sense? We want to make sure that we are prepared in the event that we do see a bear market, and we want to make sure that we're prepared in the event that we do see a super cycle. So let's go ahead and talk about that. Before we get started, though, if we go into a bear market, I want to make sure that we have the ability to optimize our entries as well as possible. And one thing that you're going to get slammed with is taxes. When you invest in Bitcoin, that's generally not tax deductible. And I want you to be able to deduct your investment in Bitcoin and cryptocurrencies against taxes. And there's really one major way to do that, and that is with a retirement account. One of the best ways that you can invest in Bitcoin and cryptocurrency is right here through iTrust Capital. If you go to itrustcapital.com/go/crypto-jeb, that's in the description, so check it out down below. When you go to iTrust Capital, you're going to be able to sign up and set yourself up a retirement account. Now, I know you probably already maxed out your retirement account for this year. That's what we do. We max out all $14,000 of contributions within the first couple of days. Maybe you haven't. Maybe you're just coming up to the end. You've only got a few $100s left to throw in. Whatever it is, no shame, no worries, no problem. But what I want to encourage you to do is moving into the new year when we have those new contribution limits, make sure that you have iTrust Capital set up. It only takes a few minutes to set it up. Check them out with the link in the description box down below, because you can actually set up a traditional or a Roth IRA or an SEP, self-employed plan, IRA, through iTrust Capital and get all of the traditional tax benefits for investing in Bitcoin. You kind of know how this works. Traditional IRAs, you're able to deduct the investment against this year's taxes. Roth IRA, you're able to not have to pay income taxes on the distributions when you hit retirement age. Fantastic plan. If you're going to invest in Bitcoin and cryptocurrencies, there's literally no reason not to make sure that you're benefiting by not having to pay taxes on those investments in one way or another. So make sure to sign up. You'll get a $100 special funding bonus using our link after you sign up. Big thanks to iTrust Capital for sponsoring this piece of content. And one last thing I do want to mention is the premium custody account. When you invest in iTrust Capital, people are like, oh, I don't want centralized exchanges holding my stuff. I want a cold store. I totally agree with you. You should self-custody a lot of Bitcoin, but they do have institutional grade custody. They do have award-winning US-based support. I'm constantly getting text messages from their representatives out in California asking me if I need anything. I got one 2 days ago. I'm like, no, I'm good. Thank you so much for reaching out. If I need something, I'll make sure to text you back. These are real people. They speak, you can understand them. Let's just say that. I don't want to be rude, but you can understand them. They're in the United States. They actually care about you. There's very low cost. There's no monthly fees. And the cool thing about the premium custody accounts, which is where your IRAs are, is that they're one way in, one way out. If you invest money in Bitcoin and cryptocurrency, then you can only withdraw that money to the same bank account that you invested with. So let's say you wrote down your password on a napkin and handed it to someone. They hack your iTrust Capital account by logging into your account because you have terrible password management. They can only withdraw funds to your bank account. Whoop-de-frickin-do. Like, you're not going to get hacked. iTrust Capital is a very, very strong place to invest in Bitcoin and cryptocurrencies. So, let's go ahead and talk about this. What would a standard bear market look like? I'm really excited for this. I'm so excited for this. Let's start with a clean chart, and I'm going to show you a bunch of different analysis from previous market cycles. Okay, the first thing I want to point out is that the last two bear markets have had this pattern. There's pattern. The vast majority of the bear market happened at the very beginning of the cycle. That's kind of hard to see on the log chart. If you look at the linear chart, even the last market, you can see it. The vast majority of the bear market happened within the first 90 days, which is what we're seeing. People are like, oh my goodness, Jeff, Bitcoin's jumping off a cliff. It's dying. It's never moved this fast before. Yes, it has. Yes, it has. That's factually inaccurate. Bitcoin has moved this fast before. I've watched Bitcoin crash 50% in 4 hours. That is a lie. Bitcoin has moved this fast before to the downside. Bitcoin has not moved this fast to the downside since the ETFs launched, which is interesting. That is of note. But it has moved this fast before, plenty of times. And it has moved this fast before at the beginning of the last two bear markets. So again, we're starting with that second option. We're going into a standard bear market. What would that do to Bitcoin? Where would the bottom be? Where should your liquidation prices be to keep you safe? By the way, if you're in a leverage long, I saw some of you guys that are in leverage longs that you're up at like 109. I know there's like a couple of you guys, because I can see in the exchanges where you signed up under our link, I can see your position. Some of you guys have entries at 109 and you're down like 1,200% because you keep adding margin. Why? Like, I love you. Stop losses. Seriously. Guys, this is completely off topic, but this broke my heart. I saw this last night. I'm like, what are you doing? Stop losses. If you're using leverage, use a stop loss. Like, the only reason that you wouldn't use a stop loss is if you're on like 1.2x leverage and your liquidation is like $10,000 a coin. Please, use your stop losses. My gosh, this is why we teach about trading. Is actually, I lean into teaching about trading because so many of you guys do it in a way that gets you hurt. People are like, Jeb, why do you teach about trading? Trading gets people hurt. That's why I teach about trading, is because trading gets people hurt, and I don't want people to get hurt. That's why. Anyway, in the beginning of bear markets, we have seen Bitcoin drop very rapidly. So let's go ahead and quantify that. During the 2017 top to the bottom of the first impulse of the bear market in February of 2018, Bitcoin dropped 70% in 53 days. 70% in 53 days. Keep that in mind. The beginning of the next bear market, November the 10th, 2021, Bitcoin dropped 53% in 74 days. Basically flipped, right? 50 days, 70%, 50%, 70 days. Thus far, this correction from top to wick yesterday has been 36% in 48 days. It is smaller, and this makes sense because of the diminishing returns. 70%, 52%, 36%. This movement is not necessarily over, but I do think it is close to a bottom, and we're going to talk about where that bottom is in just a moment. Now, what I want to point out, and this is what will hopefully be encouraging to you, the entire rest of the bear market, Bitcoin would drop 47%, but instead of taking 53 days, it took 300 days. And, by the way, the first drop, we dropped $13,000. The rest of the bear market from bottom to bottom, we dropped only $2,800. In other words, if you run the numbers here, almost 80% of the bear market took place in the first 2 months. The rest of this, in real talk, real sense, was basically just a lot of sideways trading. You can kind of summarize what happened in 2018, and we were making videos every single day through here. This was my come up, was in this time. You can summarize basically the entirety of this market with these two lines. It's extraordinarily steep, and then we just kind of rolled downhill. Traded sideways, and then we had one last plunge, right? So, when you're thinking to yourself, man, this is so painful. I know, it's because it's possibly the beginning of a bear market. We've talked about this possibility extensively. We've talked about the possibility that we could drop down to 75,000. We said it was the less likely scenario, but we said it's very possible, and you need to be ready for it. I've been telling you guys for months, you need to be ready for a bear market. I'm not saying I thought one was going to happen, because I didn't. I have very heavily been leaning in the direction of the super cycle. That's now been, at least short-term, invalidated. It might be revalidated. We're going to talk about that in a minute. But we need to be prepared for bear market. And what does that mean? We need to have an emergency fund. We need to have a 50% revenue reduction plan. We need to be financially sovereign. We need to have bid orders lined up down at 75 and down towards 50. Ooh, I just spoiled where I think the bottom is. But anyway, you understand my point. We have the vast majority of the correction first, and then we have not much correction after that. Now, let's look at the next bear market. Over here, you saw the Bitcoin dropped the same percentage both times. Notice this. This is a much more mature market. Much more mature bear market. This bear market over here, we dropped 84%. This one, we dropped 77%. The diminishing returns, right? We dropped $36,000, then we dropped $17,000. This is about a 2-to-1 ratio. For every dollar we dropped in the opening move of the bear market, we dropped one more dollar from that bottom towards the eventual bottom. If you draw a line, looks like this. You can see that the overall top to bottom movement is a lot shallower. You understand? Now, let's apply what we just learned to this market. Now, pause. Before we do that, we have to figure out where the bottom is, because we don't know that $80,000 was the bottom. We don't know that this bottom is in, because this is not necessarily confirmed that it's the bottom. But what I will say is that there's a lot of technical confluence at 75,000. If you'll remember, when we were up here, above 115,000, we said we could drop down to 75. And there's a very high likelihood that it would hold. I still believe that. There's a very high likelihood that 75,000 will hold. If you'll remember, this entire bull market, check this out. You're going to be like, whoa, technical analysis works on the long term too. Bitcoin had this gigantic inverse head and shoulders pattern. You draw your price target. Check the extrapolation. Price target was exactly 126,000. Golly, we do not want to fade TA. Goodness gracious. Sometimes even I, a technical analyst, I have been for almost a decade, fade technical analysis. Look at this. That was the price target of this gigantic multi-year inverse head and shoulders pattern. Predicted the all-time high to the dollar, and the timings of the cycles predicted the date almost to the day. Remarkable. It's incredible. Okay. So, oftentimes when you're breaking an inverse head and shoulders pattern, there's a possibility that you come back down to the neckline. And it kind of makes sense. There's a big zone of support here at 75. I'm going to give you, I think I'm going to give you about 4 different reasons why $75,000 is probably going to hold in the short term. First reason, this trend line. We rejected off of that trend line. We might just hold this trend line. Old TA coming back to inform current movements. I love technical analysis so much. Another reason why it might hold, $75,000, plain and simply, it's a big even. It's 3/4 of the way to 100,000. It's a big even. It's also a previous all-time high sitting right here. So that gives us major confluence here between 75 and 76,000. On top of that, if you will recall, we talked about how the day of us breaking below 94, and actually a couple days before this, I was hearing whispers of this, and I really got full confirmation of it a couple days after. Everybody has buy orders at 76. This is what everybody's looking at. I am simply giving you the technical analysis that the institutions, the exchanges, and the whales are looking at. This is what they are looking at. They're looking at this level because they front run all their bid here. They want it to go lower, but they put a lot of buy orders at 76. In other words, somebody has been forced selling, which is why part of the reason we dropped so hard. 10-10, I was like, when that happened, I'm like, oh crap, that might start a bear market. That was really bad. A lot of bid down here at 75. A lot of very important, powerful people, in control of tens and hundreds of billions of dollars of wealth. I'm talking the biggest exchanges in the industry. You know their names. We talk to them. Have you noticed? We have sponsorships with it. Like, we talk to them. I'm not making this up. I'm not like, oh, I have insider information. I got the little earpiece like, oh, it's just coming in from Israel. No, I'm serious. Like, we talk to these people. Like, this is where their bid is. It's a 76. Now, again, I'm a fiduciary, so I'm not going to reveal any individual's entries. That would be immoral of me. But what I can say is that you know their names, their household names. You've seen them on this channel, etc. These are big names, and everybody has their bid at 76. And this is why, because of this chart. On top of that, we also have the visible range volume profile showing us that there's a giant volume gap right here. Remember a couple days ago I said, man, I'm not exactly sure where the bottom's going to be, so I'm just going to shut my trap for a minute. I know we're going down, but I don't know exactly where. Well, now I've done probably 30 hours of research since I said that, like, I don't know, on Monday, and this is what I'm coming up with. This is where all the bid is from the big players. This is why it's here. There's this giant visible range volume profile gap here. You have that uptrend, you have the flat level at 75, and you also have all the institutions buying at 76. This is why you're seeing Bitcoin come down to this zone, because that's where all the bid is, because that's where the visible range volume profile gap is. We ran straight through it. We spent basically no time on the dip down here. Bitcoin likes to fill gaps. It does not like having these big open tranches here in the visible range volume profile. Those are 4 reasons why Bitcoin is probably going to bottom in the short term between $73,000 and $80,000, which is where we just bottomed. Now, we know the bottom's at least at $80,000 because we went there the other day. So we can go ahead and shrink our zone down to that level. But somewhere in here is probably a bottom where we're going to see a major bounce. What happens when we see that major bounce? Well, what's probably going to happen is Bitcoin is probably going to rally up to the 50 moving average, 50 weekly moving average. Somewhere in here, it's probably going to get a bounce. It's going to rally up towards the 50. Now, what does this mean? Well, if you recall, this is where our previous analysis comes in. If you recall, when we bounced off of that first bear market leg towards the 50, we had a 2-to-1 ratio. This rally was this crash was $36,000 deep. The next one was $18,000 deep. Almost predictive, right? 2-to-1. If we simply apply that same, oh, and by the way, there's a diminishing return, right? There's a diminishing return. It might be more like 1.5 to 1, because over here it was 5 to 1. 5 to 1. $13,000, $3,000. $14,000, $3,000, right? Over here, it's 2 to 1. So we're probably going to see something similar to this if we do go into a traditional bear market cycle. So if we bottom somewhere above $74,000, then let's just go ahead and move this first leg of the bear market down towards $74,000. That gives us a $52,000 drop. Let's just call it a $50,000 drop to keep it simple. Let's just say $75,000. It's going to help give us an idea of where we're going. Let's just call it a $51,000 drop, right? This is probably where a local bottom will be found. There's a lot of volume coming in. It makes sense. I don't know that 80,000 was the bottom. We might go lower because I'm going to be honest, this bounce is trash. So we're probably going towards 75. A lot of those bids down at 75 are probably going to get filled. Is $80,000 going to hold? I'm not real confident in it. It might. There is a lot of volume coming in. I will say that. You can see all the volume coming in here. See? A lot of volume. A volumetric bottom gives us confidence that something's going on. But I'm just really not sure that that's going to be the bottom. We'll see. It's very possible that we continue lower. I'm interested to see, as I said earlier in the stream, what the 9:30 New York Open on Monday does. If we have a big crash again, yeah, 75,000 is coming. So let's just go ahead and be conservative and say that the first leg of this bear market, again, if we're in that first scenario of we're going into a 4-year halving cycle bear market, is 51,000. 2-to-1 ratio from our last bear market. 50,000 divided by 2 is 25,000. The 4-year halving cycle would also say that we're going to have a bear market bottom approximately 365 days after the bottom, which would give us the bottom being about half as deep down here, negative $25,000, right around October of next year. This is what the 4-year halving cycle would tell us is going to happen. If we're going into a bear market, the bear market will almost certainly look something like this. And then start to recover. That's most likely, if we go into a bear market, what's going to happen. A drop down as low as $50,000. And in fact, this is such a high possibility. I mean, if we do go into a bear market, into a 4-year halving cycle bear market, this is almost certainly what it's going to look like. We're going to go ahead and take a screenshot here. Post it on X. If we go into a traditional 4-year halving cycle bear market, this is what it will probably look like. Bounce back to 50 WSMA soon, and then rejection down to a bear market low of 50 to 55K, unless someone explodes, and then maybe we go to mid 40s. That is the first possibility. Now, I'm going to defend this possibility. I'm going to explain to you why this bottom makes sense for $50,000. One of the first things I want to point out is a good friend of mine, Plan C, his quantile model. I think it's phenomenal. It's got a lot of data here. As you can see, 9 months out from now, which is give or take the bottom, you're looking at like $68,000 being the bottom of the quantile model. So we might dip a little bit below the bottom here, right? But in general, you're looking at very similar ranges to what I just talked about, like $50,000 to $70,000 over the next year or so. He would lean more in the direction that we're going into the super cycle. I'm kind of waiting to see what's going to happen, but I'm kind of caught up in between. I don't really have enough data to decide which one I believe in right now, because both of them have very strong arguments to be made. But it is possible that we come down here to the lower range of the quantile model, dip just a little bit below it for a couple of months, and then bounce back up, and then we rally up to the top of the quantile model, which would point us up towards like maybe $300,000 in the next bull market. Now, we can talk about next bull market projections. I think that if we do go into a full bear market, next bull market, you're probably looking at 250 to 300 as the all-time high, which is why buying at 40 and 50 and 60 and $70,000 is such an important entry, and why the exchanges are trying to do that. By the way, before I defend why $50,000 sometime next year is possible, let me just say, everybody behind the scenes wants a bear market. You don't want a bear market because you're over leveraged. The exchanges, the whales, and yes, even the ETFs want a bear market. They do. Because not only do they custody customer funds, they also have their own funds, and they want to buy at 50 to sell at 5 million. They want to get 100x on Bitcoin again. Okay? So this is the first scenario. The second scenario that we'll talk about is the super cycle, and that basically is that we bounce here and we break through the 50, and then it all comes down to this decision point right here. This decision point here in January, when we rally up and test the 50, is going to be really the telltale sign. And it's possible that we reject off of this, go into an actual bear market, and we have a shortened bear market because the super cycle idea is actually valid, but the 4-year halving cycle just has so many ardent adherents. There's intentional manipulation to drive us down there. Buy orders are placed lower than they otherwise would be because we're in the 4-year halving cycle bear market season, etc. Right? Now, let's talk about why $50,000 is possible. If you pull a Fibonacci extension retracement off of the entire bull market, that's the 0.618. Basic Fibonacci theory tells us that when Bitcoin or when any market goes into a rally, typically it has a retracement at the 0.618 before it rallies farther. That is like one of the things you learn on day one in CT2A. That's one of the things you learn on day one in market analysis. And also, you can see that this would be a pretty beautiful two-tiered head and shoulders pattern. And then you bounce higher. And what that would do is that would give us that bottom range of that quantile model that Plan C is talking about. It would also give us the bottom range. This is some analysis I was doing last night to kind of prepare for this. Let me go ahead and remove as much of this as I can so I can show you. If we were to drop down here to the 0.618, then what we would do, like right over here, is that we would skip this uptrend that everybody's freaking out about. If we did drop down to the 0.786, then that would drop us right down here towards this uptrend. That'd be at $35,000. But we're really likely not going to go there unless, again, somebody explodes. Like I'm talking Coinbase, Kraken, Crypto.com, BlackRock strategy. Somebody huge explodes, or if like you have just a massive rejection, just something explodes. I mean, something would have to be really, really bad for that to happen. What you're probably going to see instead is Bitcoin hold that line. The all-time high cycle top from 2017, all of them lows, bottom sitting right there next year at 50K. $50,000 if we go into a traditional 4-year halving cycle and the technicals call everything perfectly, it is extraordinarily obvious that the bottom of the bear market would be between $50,000 and $57,000. So I think we have thoroughly explained the standard bear market theorem. 50 to 57K within 12 months of 10, 6, 25. And we will also add here possibly sooner or higher due to macro changes. And that's one of the last things I want to mention here that will actually lead us into the supercycle theory, which is that there are major macroeconomic differences between this bear market and the previous bear market. To figure that out, you need to look no farther than QT. This bear market took place when QT was starting. You can see if we just go ahead and draw a vertical line here between the top and the bottom of the bear market, see QE was ending. Right now, we are doing the exact opposite, which is that QE was ending. QT now, quantitative tightening, is ending, and you're probably going to see at least some QE. Probably not a ton. We don't have an announcement for that yet. But what we do have a confidence of is that this is a fundamentally different market that is not as bearish as this one. We had the Russo-Ukrainian war kickoff over here. We had inflation running hot at 10%. So a 77% bear market was significantly more likely back here because you had a significantly more difficult liquidity environment than what Bitcoin is going into right now. The next year, 2026, and this is where the first theory of the 4-year halving cycle bear market down to 50 starts to break down. 2026 is shaping up to be an extraordinarily bullish year for risk on assets because you're likely going to see easing. You're likely going to see lower rates. Jerome Powell's out in like 4 months, and you know Donald Trump's going to put somebody in office who's going to slam the interest rates to the floor. He's going to run the economy as hot as possible. Scott Bessent has already come out and said that that we're just going to try and outgrow the debt. How do you do that? Print or go burr, right? So this bear market season that you see set up by the 4-year halving cycle is the exact inverse of what you saw in the last bear market, which gives us this idea that what may end up happening is that because of the 4-year halving cycle ardent believers, which I am not one, I had to flip bearish because my technicals told me to, but I am not actually a believer in this. The macro environment tells us that this is the worst case scenario and probably will not fully complete. It depends on what the market does. But do you really think that Donald Trump, the president of crypto, is going to allow Bitcoin to be at an exact bottom during the midterms, which he desperately needs to win if he wants to be able to get stuff done in the second half of his presidency? I don't think so. I really don't think that's going to happen. The Trumps have staked their entire lineage on the crypto vote. There's been talk about the Bushes retaking the presidency. And Eric Trump came out and said very clearly, we will not let that happen. They are trying to build a dynasty. Trump wants J.D. Vance or Eric Trump or Don Jr. or one of them in the presidency after him. If they screw over cryptocurrency, none of them gonna vote for him. None of them are gonna vote for his picks for midterms. This makes a lot of sense if you throw fundamentals out the window. If you look at technical analysis in a vacuum, this is like a 98% chance of happening. If you just look at Bitcoin as a technical pattern repeating itself over and over and over again, and you look no farther than the Bitcoin chart, which is what a noob technical analyst will do, this is like a 98% send. This is like basically, shipped and ready to send off to market, right? This is just a done deal if you ignore everything going on in the global economy. So that's where we get to the global macro leads to short and bear market and super cycle. Now, let's talk about what that would look like. We've discussed what a full-blown bear market would do to Bitcoin. It would probably be a $55,000 bottom sometime in Q3 to Q4 of next year. Extraordinarily likely if we had the same macroeconomic conditions that we did in 2024, in 2022, I would be shorting Bitcoin right now with everything that I have. But we don't. And this is where, honestly, I'm sitting here just thinking it's a little bit difficult to tell until we get more information because both have their merits, and I'm not exactly sure which one's going to take place, but I'm really on the fence. So I'm not going to necessarily tell you which one I am. I haven't exactly like sworn fealty to one of these ideas because I think it's probably going to be somewhere in the middle. I think that the market is going to try to do this and it's going to fail and Bitcoin will probably end up bouncing a little bit higher than this. That's what's probably going to happen because of the macroeconomic environment. So let's talk about global macro leads to short and bear market and super cycle. Why? Again, QT is ending soon. Not necessarily QE is coming online, but QT is ending soon. We are expecting probably about $250 billion a year of QE, which is very minimal. Like we were doing that every month back over here. We're expecting probably a 10th to a 15th as rapid. But if you do see the AI bubble pop, right? If you see the AI bubble pop, then you end up seeing things get really dicey really fast. If you look at NVIDIA had an earnings call. Jensen himself came out and said that if they had have missed earnings, the entire global economy would have been in deep crap. That's not his exact words, but that's basically what he said. They managed to beat earnings by $2 billion, and they still dumped because people are tired of watching all the cash flowing around from Microsoft to OpenAI, back to NVIDIA, on over to Intel, and around and around and around it goes. And where's the real money? It's just going back and forth and back and forth. It's like multi-trillion-dollar wash trading. There's a lot of value in data centers, and data centers are the future. But there is a big conversation right now about whether or not this is actually leading to genuine growth in the stock market or not, and we don't know. And if you do see any kind of signs of stress from the stock market, you will see the printer get turned back on, you will see interest rates slam to the floor, and you will see a full-blown quantitative easing cycle take place because of what you're seeing happen in the labor market as it relates to AI. Artificial intelligence has already led to the replacement of hundreds of thousands of jobs. Let nobody tell you any differently. When I started this job, I hired a friend of mine to do copywriting on a store that I had. That job does not exist anymore. Like many jobs are being replaced. And so if that happens, that is the kind of economic crisis that you saw with COVID. Nobody can work. Inflation skyrockets. What do? Printer go burr. And so there is a possibility that in the next year or two, you do see a significant amount of stimulus into the economy because people be homeless. And so the labor market conditions could get very, very dire very, very quickly. Artificial intelligence has come a long way. I was talking to my wife. We were looking at buying a Tesla Model X at some point. Maybe not right now, but in the next bull market, right? I don't want to dump all the cash in here. But full self-driving on Teslas, which is a form of artificial intelligence. It's not large language model, large learning LLM. The basic FSD has done $6.5 billion worth of driving hours. Over 6 billion of those have been since the beginning of 2024. The last 2 years, we have seen artificial intelligence come online in a way that it has never been seen before. It is massively disrupting the economy. And so if you see that really start to have a major impact on the way that the global economy, especially the United States economy, works, you will probably see easing. If you see a stock market crash, you will probably see easing, etc. And so as we move into the next year and labor market conditions continue to deteriorate, I expect that the balance sheet is going to look a little something like this. You're going to see this bottom, and it's going to start to move to the upside. And you're probably going to start to see that quantitative easing leading us into the bottom of the bear market. And so the bottom of the bear market here may end up being a lot lower than it would have been otherwise because you see QE, you see easy money, you see possibly these stimulus checks coming in. And so what ends up happening is that Bitcoin's bottom might be a little bit higher. And that's where these two, and you're going to hate this, but these two theories are basically like on a spectrum. This would tell us that we just bottomed. This would tell us that we just bottomed and Bitcoin's about to rally to $200,000 like in the next few months. This would tell us what we already said. I think the reason I'm having such a hard time deciding between which one of these theories to go with is because I don't think either one of them are completely telling the whole story. I think that both of them together are telling the whole story. I think that you would typically expect a 4-year halving cycle after 1010 bear market crash and after we broke through 94, the bull market support. And then I think that this theory of global macro leads to a shortened bear market and super cycle makes a lot of sense as well. But there's still a lot of ardent believers here. And so there's probably going to be a blend of these two. So what does that mean? It probably means that you're going to see something that looks like a bear market. It'll probably follow similar structure, but instead of us actually going all the way to the downside here, we might see a much higher low. We might see Bitcoin do something like this. If we look at the visible range volume profile, you will notice that the point of control, if you look at the last 2 years, is here at 67,000. We might see a higher bounce than 75 because of the macroeconomic tailwinds that are coming in from quantitative easing and lower interest rates that we may be seeing next year. Bounce up to the 50, reject, maybe we go a little bit lower down here to 67 or 60 or 67, and then we bounce. And that is something I'm hearing. I'm hearing a lot of the people behind the scenes. They're not necessarily talking about us going to 50, because a lot of them, quite frankly, would blow up. A lot of the big players behind the scenes are saying we won't let it go to 50. Because they'd be losing too much money at that point, and they will genuinely, literally just buy the living hell out of it to manipulate it to the upside. And I mean, think about it. When you're buying Bitcoin, you're moving the price, you're manipulating the price. They just have $100 billion, right? It's just, they want to see the price go up, so they buy it, right? Many of these big players do not want to see this number happen. They want to see like 60. That's what they want. They want 60K. And so that's where I'm starting to think that you're going to see the bear market be shorter and smaller than what we would anticipate. And so where I'm leaning, although I don't want to make a really firm call, where I'm leaning, somewhere in the middle. Probably summer, not fall, 2026, and possibly, 57 to 60K. Maybe let's say possible 57 to 65K. And so just think about it. If this takes place, we are already down $40,000 from all-time high. To drop to 50, which is the bottom of that range, is only another $35,000. Drop's already half over. And we dropped down to 80, right? So that's only 30,000 and 45,000. So actually, that's your 2 to 1 right there, as we talked about, right? So in general, I anticipate that somewhere in between these two theories is going to take place. And so I am going to be laddering into investments. If we see a bottom at 76,000, I'm going to be buying that. I'm buying it pretty hard. If I see Bitcoin drop down towards 50, I'm going to do everything I can to find as much cash as I can anywhere I can. And be like hunting in the couch cushions, you know what I mean? Selling stuff. And I'm going to be buying. Because what I expect is going to happen after this bear market, wherever it is, I think you're going to see bare minimum a 500% bull market. And this is where it gets exciting. And this is one of those pieces of context that I really need to give you. Wherever Bitcoin bottoms, let's just say Bitcoin drops down here to the 0.618 at 57,000 and we bottom from there. Wherever Bitcoin bottoms, I fully anticipate that Bitcoin, let's just say it bottoms at 57,000. I fully anticipate that Bitcoin will almost do as large of a bull market as it did here. There's an 800% bull market. I think the next bull market will probably be something like 600%. And if it is, the next bull market leading into like 2028, 2029, you could see Bitcoin trading up at $400,000. You understand? Like I really could see that happening. Possibly like 400 to 500%, $300,000, $400,000 in the next bull market. And so that's why this is, again, the reason I'm sharing this all with you is because to the best of my understanding, this is how the exchanges, the institutions, the whales are looking at this. They're saying we might drop into that 57 to 75K range, and then it'll blast off to 300 or 400. Wouldn't you, as an exchange, just think about it for a second. Think about you're one of these exchanges. Think about you're one of these market participants that has billions of dollars. Think about this. Wouldn't you love to go 2x leverage long? Just 2x. That's all. Just 2x leverage long on Bitcoin at 57,000 to run up to 300. That's a 416% move. But wait a minute. 2x leverage. It's 830%. Now, just imagine you'd make 830% on $25 billion. Do you understand why these exchanges, why the whales, why all of these market participants want Bitcoin to go down to 60? Do you understand why they didn't place their bid at 85? Retail's buying at 85. The exchanges are buying lower. At 57, this is a 400% rally. At 85 is a 250% rally. These are direct quotes I'm getting secondhand from these guys. Worst case scenario, it only goes to 80. Worst case scenario, it only goes to 75. Best case scenario, it goes to 57, 60 or so. That is the best case scenario, because instead of sitting here like this on the minute chart, people with money have zoomed out and they say, what is Bitcoin doing? So far, it's following the 4-year halving cycle to a T. As much as I think it's self-fulfilling astrology, it's happening, and we can't deny facts, right? We have to update our analysis based on facts that have been presented to us. The 4-year halving cycle astrology is coming true. So if that's happening, if a bear market is taking place on time, wouldn't that theoretically mean that a bull market is going to take place on time? Wouldn't you use the traditional extrapolation to figure out where the top is? It's probably going to be. I mean, it's very possible that it'll be 2 times higher than the last bull market, right? Our current bull market is 2 times higher. 2 times higher than 125 is 250, right? With all the institutional inflows, maybe it goes a little bit parabolic with the easier money. Because remember, this I think was a stunted cycle. We had $5 trillion roll off the balance sheet, and we still doubled the previous all-time high. We could easily triple all-time high in an easier money environment. It's $375,000 a coin. You understand? Like, this is the future, guys. This is how the big players are thinking. I'll grab an entry at 60K, put it on minor leverage where my liquidation is below 30, so I never get liquidated. I can hold as low as I want, just add up reserves, and then I'm going to ride it to the top. Now, they're not doing this at 109. Like some of you guys did. We went leverage long at 109. No, they're trying to go leverage long at 57, 60, 65. So that's what I think is going to happen. I think that these exchanges, these big players, I think that they're going to fill their bids. I think they're going to get the prices they want. Bottom line is they control 30, 40% of the supply of Bitcoin, and they have a huge amount of the dry powder. And they've got their bid down at 60, 65, 70, 75. I think they're going to get filled. And so I find that we're going to see something between 57,000 to where we are right now, but more specifically, probably somewhere between $60,000 and $70,000 is going to be the bottom. And that will be a generational entry. When will that happen? Sometime next year, probably in the first half of next year. That's what I expect is going to happen. I'd love to hear your opinions on this as well. Love to have your opinion on this as well. Now, somebody mentioned Elliott Wave. Let's talk about Elliott Wave, because I love Elliott Wave. Elliott Wave gave us the 1, 2, 3, 4, 5 pattern. We talked about this a while ago. If you'll remember, this was one of the theories. This is, in fact, I think I remember saying that if Bitcoin doesn't bounce at 94, this is why. And that was because this is a 1, 2, 3, 4, 5 pattern. Elliott Wave would give us an A, B, C, but let's figure out where this goes. We would have the bottom bounce up to 0.618. Typically is what you would see happen. Bounce up to 0.618, which would be at 107. And then you would oftentimes drop down to the trend-based fib extension, which we would use right here. And that trend-based fib extension, honky-dory, look at that, 50 to 57,000. That's what Elliott Wave would tell us. It'd tell us the 50K range. So the exchanges, the big players, all of them, they would love to see Bitcoin go down to 57, 60K, but they don't want to go below 50. And I do have word, and I'm pretty confident that this is accurate, that there would be a great defense of $50,000 if we went there, made by exchanges, made by whales, made by institutions, coordinated to prevent Bitcoin from going below 50,000. You think I'm wrong? What do you think? What do you think? The stock market looks like this on purpose? Like, really? You think this is natural? This is not natural, the way the stock market looks. This is not natural. This is manipulated. These are market makers creating this market. It drops too far, they say, No, I don't think we're going to let that happen. And then they buy the dip and they manipulate it higher. The Fed prints the dollar, etc. It's a completely manipulated market. Completely manipulated. But you can play it. And that's a cool thing. You can play it and make money. You make real money. It's like a video game. You make real money. So if we go down to 50, nobody's going to let that happen. There's genuinely going to be a great deal of manipulation going on there. Now, the only way that you would see Bitcoin go below 50,000, is because somebody exploded. And one of these big market makers that I'm talking about genuinely just imploded on themselves, and all of their schemes and plans about stopping Bitcoin from going below 50 bankrupted them. But something you have to understand is that all of these exchanges, all these big players, all these whales, all these institutions, they have been here for multiple cycles at this point. The institutions not so much, but the whales and the market makers and the exchanges, they've been here for multiple markets, and they are at all times prepared for a 78% downtrend, because that's the bear market that we saw last. And you should be too. You should at any given time be prepared for a 78% bear market at least, because that's what we've seen happen before. And theoretically, that would be our worst case scenario, is that Bitcoin does the exact same thing that it did last time. So what do I think is going to happen? I think somewhere between this is what's going to happen. And that's our take. That's our take. Guys, while we are building wealth here in the Bitcoin and cryptocurrency space, it is paramount. It is paramount that we stay safe. And so that is why this stream is brought to you in part by NordVPN. If you guys have not already, make sure to sign up for NordVPN, and I'm going to tell you exactly why. We are coming up on Black Friday in 6 days, and this Black Friday deal is only going to last until then. When you sign up for NordVPN, you're going to be able to keep yourself safe while you browse online, because hackers and thieves are constantly trying to steal from you. They are trying to steal from you. They do not like you. They want your money, and they don't care what it does to you or your family. They are trying to get your information. They are trying to drain your wallets. They want to steal your money. And so you have a real enemy out there. In fact, you have hundreds of thousands of them out there that are trying to steal your money. NordVPN keeps you safe in two ways. One, it actually keeps you, it genuinely defends against this kind of malicious intent by telling you whenever your information has been leaked, by telling you whenever somebody is coming after you. But more importantly, NordVPN keeps you safe by rerouting your internet traffic through their servers rather than just going off of any server, so that your information does not get exposed to anybody who's trying to look at it. And so when you sign up for NordVPN, you're going to be getting a fantastic deal using our link. Again, nordvpn.com/Jeb. And I would highly encourage you to come over here and select the Plus plan. The reason is because you're going to get 2.5 years, 2 years, 4 months to be exact, 28 months for only $105. $105 to keep yourself safe while you browse online. There's a full 30-day money-back refund guarantee. Don't like it, refund it. It's worth a try. You basically get it for free for a month because you can refund it at any time. And one thing I like about the Plus plan is you're going to get the ad tracker and blocker. People are like, oh my gosh, Jeb, I don't like ads on YouTube. Here's an ad blocker. There you go. It's right there. I'm showing you how to get away from that. You also have the password manager and breach scanner. When you use a password manager, it's going to help you to not have your passwords written down where somebody walks in your room and sees it written on your little piece of paper, right? And I still know people that write their passwords down by hand. It's not a good idea, right? So this password manager is phenomenal. I love it. And the breach scanner, this is going to tell you when there's been a data breach with your name on it. So if you have not already, sign up for NordVPN. This is a part of your toolkit to stay safe. I highly encourage you to grab the 2-year plan. You can do the 1-month plan, but it's $14 a month. Instead, you can just get the 2-year plan. And for the first 2 years and 4 months, you'll get it for only $105. So make sure to sign up with the link in the description box down below. All right, let's read a little bit of chat. All right. Getting wrecked prize at 57K BTC. On a 3x long, would probably be around 30K. That's probably safe. Yeah, I mean, that's what a lot of major players are doing. That's what a lot of them are doing. Sold half my position at 117 and felt stupid when it was higher after that. I'm happy about it now. Yeah, good for you. I'm round tripping my Bitcoin. I don't really care. I'll just buy more. Because at some point the 4-year halving cycle is going to die, and I'm not willing to take that risk. So I went into it saying, yeah, it could be a bull market top. The timing's there, but I'm good. Seems like I'm listening to insider trading. It's not insider trading. It's just stuff that I'm being told. And it's not insider trading in the sense of somebody's manipulating the market. This is just where people have their bids. It's the same thing as if I came up to you and told you I have my buy orders. If I told you on stream that I have a $1 billion buy order at $60,000, and then you went and told Jimmy Bob June at the water cooler, hey, Jeb has a $1 billion buy order up line up. It's not insider trading. Now, what would be wrong would be for me to tell you who I'm talking about, because at that point I am I am revealing other people's other people's financial information that is not mine to reveal. But what I will tell you is that they are major players that have billions of dollars. So not insider trading, it's outsider trading. It's here's the information. And ultimately that's kind of the way that I like to be. If I hear something, I'm not going to tell you who, because I want to, maintain my integrity and confidentiality as a professional financial analyst and as a professional a finance professional. But if I hear something, I'm going to tell you, because I want you to succeed. Like, that's why you come to my channel, is so you can succeed. Why would I not tell you something that I know? Yeah. Everyone sells in December of a bear year for tax loss harvesting, and bull market starts in January. That is also a possibility. That is also a possibility. That is also a possibility. A possibility. Let's see. I'm never touching alts or leverage ever again. Didn't you just talk about a 3x leverage long? That'd be safe. Sound like you got a bit of a gambling problem there. No, I'm just kidding. Chris, I'm just joking. Christopher Ryan in chat said, "Thanks, Jeb. Keep the information flowing." Look, I want you guys to be safe, and I want you guys to make money. Low 7319 said, "Nice to see you back, Jeb." Yeah, I mean, our life kind of completely blew up during the last bear market, so I didn't really get to do as much as I wanted to. So I'm really hoping we go into a bear market. I'm really hoping we go into a bear market. Why was a huge volume in 80K? Because that was the top of the institution's buy orders, was 80K. That's why. I've been telling you that since 90K. The top of their buy orders are at 80K. The free fall stops at $75,000 to $80,000. Let me say that again. The free fall on Bitcoin stops at $75,000 to $80,000, most likely. Most likely. Things can change, but most likely. Because at that point, whoever is panic selling Bitcoin because they're trying to cover some kind of obligation, and they've been doing that since 1010, whoever is doing that, they're going to meet a chunk of buy orders that's like 50 times larger than them. This is all just institutions playing ping pong with the price. And so if you understand what they're doing, then you're going to, you'll understand, and there you go. Then you can do the same thing. It's really beautiful. It's really beautiful to see Bitcoin being as predictable as possible. When will you start accumulating Bitcoin again at 57K? No, I'm not going to wait that long. I've acquired some Bitcoin at these levels. I mean, it's really just criminal not to be buying Bitcoin when you're down this far from all-time high. I mean, we're down 32% from ATH. A return to all-time high is a 50% return. So, but the 95% of what I'm going to add, maybe 80 to 85% of what I'm going to add, I'd like to add below 80. I'd like to add below 80. And if I miss it, I miss it. Oh well, but that's why I am adding some here. All right, really appreciate you guys. Hey, look, this market is more predictable than you think it is, and I want you to be able to build wealth in the Bitcoin and cryptocurrency space. Many of you guys are traders. One of the reasons I started talking a lot more about trading is because I saw a problem in the industry. I saw a problem where people are really freaking stupid with money when it comes to trading. They're dumb. They do really stupid crap, like not using stop losses, like letting themselves get liquidated. Like one thing I've seen lately from some of you guys, some of my own viewers, is they get to their liquidation price, and instead of getting liquidated, they keep adding margin. Like I saw one guy who was trading, he had an entry at 109,000 on like a 40x long on Bitcoin. He's down 1,200%. Stop! That's how you go bankrupt. Stop that. I want you to be safe. I don't have a problem with trading. I think you can make a lot of money in trading, and I highly encourage you to learn how. And if you want to learn how, sign up for 2Bit, and I'm going to teach you. Lesson number 1, use stop losses. You should never get liquidated, and you do not just add fuel to a losing trade. Unless you're doing like some kind of, there's like 0.1% of strategies that you do that with, but if you don't know what you're doing in trading, you never add money to a losing trade. You have to cut your losses. If you want to build wealth in the Bitcoin and cryptocurrency space, I'm going to show you how to make money trading, but you need an exchange to do that, and 2Bit's a phenomenal place to do it. So make sure to go to the link in the description box down below and sign up for 2Bit. This is where I do a lot of my trading. I would highly encourage you to check it out and do the same thing. Check it out. All right, guys. All right. We're going to have to wrap it out. We are going to have to wrap it out. Then why would Bitcoin go below 75 to 80K after seeing that high volume at 80? Because this is a much bigger movement than just what's happening in the last day. That's a lot of volume, but that's a lot of volume showing up on the hourly chart. We're talking about weekly chart movement. That's what we're talking about. I hope you guys did enjoy today's stream. Like I said, we're going to have to wrap it out. Make sure to check out I Trust Capital, NordVPN, and 2bit. Links in the description box down below. I Trust Capital is going to be a fantastic place for you to trade and invest while avoiding taxes. NordVPN is going to keep you safe while you browse online, and 2bit is a tool that you are going to need if you want to be trading in Bitcoin and cryptocurrencies. These are all different products that help to support our channel when you sign up for them, but more importantly, they are products that help you in a multitude of different ways. So make sure to sign up with the link in the description box down below. I really appreciate all of you being here. If you enjoyed today's video, make sure to hit that like button and subscribe to the channel. Also, make sure to go and check out Plan C on Twitter. Loving this quantile model that he's been working on for the last year and a half. I think it's going to end up being very accurate. Make sure to follow myself on Twitter over here. This is, we are at CryptoJeb on Twitter. Yes, we are in America. I'm not an Indian. I'm not in Bangladesh. I'm not, no offense to that, but everybody's talking about like where you are. But there you go, Florida. There you go. There it is, right there. I'm in Florida. So make sure to come and follow us on Crypto Twitter over here at CryptoJeb. Really appreciate all of you being here. And before I go, I do just first want to thank each and every single last one of you for watching, as always. And I will see you guys in the next video. Peace.
Oh, I got a real good